Warren Buffett believes that the world can't change dramatically, and anybody who thinks that you can change energy sources 10% of the year might not be the case because he doesn't believe it will work that way. However, Warren states that the world was going in the right direction in terms of minimalization of carbon. Today, we'll look at what Buffett thinks about Tesla and why he bets against them.
Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started.
To quote Buffett, if you guess on the penetration of electric cars like 17 million or something in 2013, I would say that I'd be surprised if more than a third of those would be electric. That's 2/3 of that plus all the ones in right now. So of the total vehicles on the road, it still might be 10% electric or something like that worldwide. I mean, you can't change this mass transportation. It is changing and should change, but in terms of the math replacing it, we just can't change that quickly. Warren believes that Elon has accomplished some remarkable feats, but would he invest in Tesla? His answer would be no. An interviewer once mentioned that Elon Musk says that Tesla will start to offer insurance for its cars and can price it better than typical insurance because of the data it collects from all the vehicles on the road. They mentioned that Warren talked about the great threat of autonomous vehicles on the insurance business, but what about the threat to Geico of automobile companies themselves getting into the insurance business? And on a very similar topic, Tesla recently announced that they're shifting to an online-only sales model, and several traditional auto dealerships are also reducing their property holdings as car buyers increasingly use smartphones and internet to shop for cars. He asks Buffett what this means for Berkshire Hathaway Automotive. Buffett replied saying that General Motors had a company for a long time, but motor insurance companies and various companies have tried it. The success of the auto companies getting the insurance business is probably about as likely as the success of an insurance business getting into the auto businesses. He worries much more about progression than all of the auto company possibilities that he could see in terms of getting insurance businesses, as it's not an easy business at all. Warren says that he would bet against any company in the auto business being in a kind of unusual success. The idea of using telematics in terms of studying people's driving skills is spreading quite widely, and it's important to have data on how people drive, how hard they brake, so he doesn't doubt the value of the data. But Buffett doesn't think that the auto companies will have an advantage over that and won't make money in the insurance business. Using the internet to shop for cars is like using the internet for shopping for, well, everything. It's another competitor, and there's no question that people will look for better ways, and the gross margin on the new cars is about 6%, so there's not a lot of room in the game. But that will be a method that will solve some car problems, but he doesn't think that it destroys the auto dealer who takes good care of their customers with good customer service. It's not an overwhelming threat, but it's obviously something that's gonna be around. Okay, let's look at the leading candy bars. For example, for the last 50 years, he said that you can find Snickers on top and then M&Ms and so forth. And to quote Warren, he says, "I can't take them on. I don't think Elon can take them on." To put it into context, when you go into a convenience store wanting a Snickers bar, but the owner decided to sell you a different kind of bar at a discount insisting you buy it, you'll go across the street to buy your Snickers bar. The moral of the story is that the brands are moats. And if this product is selling to hundreds of millions of people and they say that they'll sell you something else for 2 cents less, or if they've got some celebrity's name on it, people will still go for the brands that they trust. So Buffett doesn't really have the same urge to produce automobiles that Elon apparently has, to kind of like the same case with the Snickers bar metaphor. There's no need for Elon to take on the big guys. People like his car and everything, but somebody mentioned about financing something where Tesla may be going back to the market to pick up some additional financing. This is what Warren calls a counter-revelation, because he thinks it wasn't just a short while ago where Tesla said they wouldn't need any financing. He's trying something to improve a product, and Warren replies saying, "I salute Elon for that, but the American public will decide whether it's a success, and it's not easy, you know." So it's probably easy to develop a new car, complete with stickers and some products with awesome features, but then there's just certain things that are not much inclined to be dissatisfied with. Warren mentioned how the iPhone has a terrific moat, that people who have an iPhone may have other phones, but they want to continue with the iPhone that they've got. They want the new version. It's just easier for them now. Their lives are built around it, and it's building a moat on people's minds. But if you're selling a commodity product, you can't do that. You need a moat. This is what Warren states. Elon, however, had a reply to this, saying during his Tesla earning call that he thinks moats are lame. They are like niceness, sort of quaint vestige away, and if your only defense against invading armies is a moat, you will not last long. And what matters is the pace of innovation. That is the fundamental determinant of competitiveness. What Warren has to say is very interesting. To quote him, there's certainly a great memory, a great number of businesses where this has always been true, but it does seem like the pace has accelerated. That in recent years, there have been more moats susceptible to invasion than there's always been an attempt to do it. And here and there are actually probable places where the moat is as strong as ever, but you certainly should be working at improving your own moat, defending your own moat at all times. And Elon may turn things upside down in some areas, but I don't think he'd want to take us on. You can look at something like animals out there in the other room, and it won't be technology that takes away the business. Granted, maybe that something else catches the young kid's fantasy or something, but there are some pretty good moats still around. Being the low-cost producer, for example, is a terribly important moat in something like Geico. Technology has really not put down the cost that much, and I think our position compared to other big companies as a low-cost producer, that's not that bad when you're selling an essential item. At another interview, Buffett was told that Apple had been suggested by some analysts who are pretty smart that they should get into the EV business and maybe do so by buying Tesla. And the interviewer asked Buffett if he and his partner Charlie Munger would suggest that Apple get into it, or would they support it if Apple bought Tesla stock.
Would you suggest that Apple get into, or would you support it if they bought Tesla?
Well, I would support what Tim Cook does better.
Despite his undying support for Tim Cook, Warren believes that it's a poor idea, starting with the fact that the auto business is not an easy business. The auto business is different than some, but if you're a premier with Google on search, or you're a premier with movies on Netflix, or whatever it may be, there's a huge first mover and size and network effect and all that working for you. You can win an auto one year and lose the next. I mean, you've got a dozen big companies out there with resources. They're going to keep coming. They're going to copy what you do. People move from one year to another, and you don't worry about the fact that, your whole life revolves around the iPhone, as opposed to you don't want your whole life to revolve around one car or something. It doesn't give a permanent advantage. With all these thoughts in mind, Buffett believes that Tesla will go into a bad ending.
Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video!